You crushed it freelancing this year. Then tax season lands, and the IRS demands thousands all at once, plus a penalty stacked on top. Nobody warned you. Quarterly estimated taxes exist to stop exactly that gut punch. Most employees never even think about this. At a W-2 job, taxes get pulled from every paycheck automatically. You never touch that money, so you never miss it. The second you earn on your own, that safety net disappears. The U.S. tax system runs on one rule: pay as you go. The government wants its share all year long, not in one lump at the end. Withholding handles that for employees. For everyone else, you handle it yourself. So who actually owes this? If you're self-employed, a freelancer, a gig worker, or an independent contractor, it's you. Your income lands with zero tax taken out, so the IRS expects you to send payments directly. And it goes beyond freelancers. Landlords collecting rent, people with big investment income, dividends or capital gains, and small business owners all qualify too. Basically, any money that arrives with no tax removed can trigger this. Remember this simple trigger. If you expect to owe $1,000 or more when you file, after any withholding, you're generally required to make estimated payments. That's the line that pulls in most side hustlers. Now the part that trips everyone up, the deadlines. Estimated taxes get paid 4 times a year, roughly April 15th, June 15th, September 15th, and January 15th of the next year. Miss one, and the clock starts ticking against you. But watch out, because these aren't evenly spaced. They look like quarters, yet they aren't. The gaps run 3 months, then 2, then 3, then 4. The IRS calls them quarters anyway, which is honestly a little sneaky. Mark these 4 dates in your phone right now. Set a reminder a week before each one. The most common mistake is simply forgetting a deadline existed, then eating a penalty for being late on money you actually had. Let's break down what you're actually paying. 2 things really. First, your regular income tax on the profit you earned. That part feels familiar, but a second piece catches new freelancers completely off guard. That second piece is self-employment tax. As your own boss, you cover both halves of Social Security and Medicare, the part an employer used to pay for you. That's roughly 15% extra on top of income tax. Ouch. To find your number, the IRS gives you Form 1040-ES. It walks you through estimating the year's income, your deductions, and the total tax you'll owe. Treat it as your worksheet for guessing smart, not perfectly. Now for the rule nobody tells beginners about, the safe harbor. This protects you from penalties even if your final tax bill ends up bigger than you guessed. Learn this one and you'll breathe a lot easier. You're protected if you pay at least 90% of THI this year's total tax during the year. Hit that mark, and the IRS won't slap you with an underpayment penalty, no matter how the final math shakes out. There's an even easier option. Pay 100% of last year's total tax, and you're safe too. Since you already know last year's number exactly, this kills the guesswork. Just copy it and divide by 4. One catch for higher earners. If your prior year income topped $150,000, that last year's safe harbor jumps to 110%. As of 2025, that's the threshold, a small premium for bigger incomes. So what happens if you ignore all this? The IRS charges an underpayment penalty. It's not a flat fine though. It works like interest, quietly piling up on the amount you should have paid but didn't day after day. And watch this trap. The penalty applies even if you pay everything in full at tax time. The IRS doesn't just want the money, they want it in schedule. Paying late, even by months, still counts as underpaying. The good news? It's completely avoidable. Hit either safe harbor, 90% of this year or 100% of last year, and the penalty simply can't touch you. The whole game is paying enough on time. Okay, enough warnings. Let's make this dead simple. Step 1. Estimate your total income for the year and the tax on it. You don't need perfection here, just a reasonable, honest guess you can adjust later. Step 2. Take that yearly tax number and divide it by 4. That's your payment for each of the 4 deadlines. Clean, even, predictable. Now you're no longer guessing in a panic 4 times a year. Step 3. Actually send the money. Use IRS Direct Pay or EFTPS, both free official online tools. It takes about 5 minutes from your bank account. No stamps, no checks, no excuses. Just log in and pay. Want an even better trick? Don't wait until each deadline scrambling for cash. The instant any client pays you, skim a flat slice off the top and stash it in a separate savings account you never touch. A solid rule of thumb is setting aside roughly 25 to 30% of every self-employed payment. When deadlines arrive, the money is already sitting there waiting. No stress, no surprise, no raiding your rent fund. And stay flexible. If your income jumps mid-year, bump up your remaining payments. If business slows down, ease off. The whole system bends with your real earnings, so you're never paying way too much or too little. One more hack for the side hustlers with a day job. Instead of mailing estimates, just raise the tax withholding on your W-2 paycheck. Withholding counts as paid evenly all year, which can quietly cover your side income too. Think this is a niche problem? The IRS reports that millions of taxpayers get hit with estimated tax penalties every single year, and that number has climbed sharply as the gig economy exploded. You don't want to join that crowd. And here's why that stings. Nearly all of those penalties were totally avoidable. People weren't broke, they just didn't know the rules or didn't plan. A few minutes of setup would have saved them real money. That's you, fixing it today. So here's your game plan. This week, open a free IRS Direct Pay or EFTPS account so the tool is ready before you ever need it in a deadline scramble. Setup now means zero friction later. Next, open a separate savings account just for taxes. Label it clearly so you're never tempted to dip in. Then automate transferring 25 to 30% of every payment straight into it. Out of sight, ready when due. Finally, pull up last year's tax return and grab that total tax line. Divide it by 4. That's your safe, penalty-proof payment number for each deadline. You now have a complete plan in under 30 minutes. Look, this feels intimidating because nobody teaches it. But you just learned what most freelancers stumble through for years. You're not bad with money, you simply needed the playbook. Now you've got it. That's a real advantage. Earning your own income is one of the most empowering things you can do. Don't let a confusing tax rule scare you away from it. Handle the taxes like a pro, and that freedom stays yours, clean and stress-free. Let's lock it in. The tax system is pay-as-you-go. If you earn untaxed income and will owe $1,000 or more, you make estimated payments 4 times a year. That's the foundation. You owe both income tax and, if you're self-employed, self-employment tax on top. Use Form 1040-ES to estimate it, then pay online with Direct Pay or EFTPS. Easy, fast, and free. No checks, no stamps, no headaches at the mailbox. And never forget the safe harbor rule. Pay 90% of this year's tax, or 100% of last year's, and the penalty simply can't touch you. That one rule is your shield. Memorize it and stay protected. The smartest move of all? Set aside roughly 25 to 30% of every payment automatically. Do that, and quarterly taxes stop being scary. The cash is always there, the deadlines are handled, and you sleep just fine. Now I want to hear from you. Are you currently setting money aside for quarterly taxes, or did this video just save you from a nasty surprise? Tell me in the comments. Your story might help someone else. If this finally made estimated taxes click, tap like, subscribe for one simple money lesson at a time, and send it to a freelancer who needs it. Take control of your money. I'll see you in the next one.